Okay, let's get some ideas from Javed Mirza. Cisco Gold Royalties. We know you like the prospects for gold. Is there something about this name in particular?
Yeah, so just looking at the charts, breaking out to new highs here, you can see this here, right at the top of this resistance range. You've got this bigger, longer term kind of ascending triangle building. The other thing is royalty company pays a dividend, so it's not just pure gold exposure without the dividend. And as we've mentioned before, we think that this cycle here, dividends are going to be a big part of the total return. So like gold, like dividends, it checks both those boxes.
Okay. Cisco Gold Royalties. Lundin Mining is your next idea because you are, broadly speaking, bullish on materials.
Exactly. And so what I wanted to highlight here is you've had a big run up and then you've had this significantly big pullback.
It fell out of favor, didn't it?
Yeah, and you see from 15 to 750, you've had this 50% retracement. What I would say right now is it's coiling right around the 50 and 200-day moving averages. I believe it's above the 50 and just below the 200-day moving average. If we can clear the 200-day and this resistance level here, then our technical work is telling us that a new intermediate term uptrend is taking hold, and that's going to have upside potential to at least around 1250. So I think we're trading around 866, so that's potentially another 30% upside. This fits in nicely with our HFL call, higher for longer, so it's in the materials space. Another name that checks a lot of boxes, and so that's why we like it here.
And higher for longer, you mean inflation and rates stay higher for longer?
Exactly. That's exactly right. Yeah.
So when would you see a reduction in interest rates? Way into 2024?
Yeah, I think from what it looks like, maybe late summer or fall of this year, and maybe even it comes in all the way in the start of 2024. But remember, what we think we're going to see is markets anticipate an end to this hiking cycle well before that. And so the market's going to price in recovery ahead of that as well. So let's say the market is pricing in the end of, or the Fed hiking cycle, call it, in the spring of this year, then it means the Fed is actually likely going to stop pausing in the fall. So what it means is the market's always...
stop hiking in the fall.
Yeah. So if markets really start to take off, call it in March, April, it's telling us that they're anticipating the market or the Fed stopping the hiking cycle, call it in September. Okay. So 6 to 9 months ahead.
Of a pause in the hiking cycle.
Exactly.
Okay.
Yeah.
And then finally, your final idea, Air Canada.
Yeah. So this is another name that if we're seeing signs that the economy is improving, and exactly the same as Ford. And so Air Canada today, we actually highlighted in a note to clients, it's cleared the 200-day yesterday. It's one of the stocks that's positive here today. Looks really constructive. And what if we can zoom in, I can show you something really interesting and compelling here, is if maybe we can get like a 1 year or a 6-month chart, and I'll show you something really interesting here. So this is perfect. So this is what we call an ascending triangle pattern. So here's the top of the triangle, and you match this with the price action. And what this is telling us is here's the kind of the resistance level, but buyers are stepping in and making this a higher low each time. So it's telling you there's demand. And a breakout above this resistance level, same thing, I want to say call it 1960. That sets up next resistance around 22, which is right around here. So it's 10% upside roughly from yesterday's close, or from today's price action too. So really compelling chart here, which we think has some strong upside. And our fundamental analyst on this, Matt Lee, I think he has his top pick for 2023 as well.
That's interesting. Yeah. Maybe if we could put up the 5-year chart again. I mean, it's still down from its pre-pandemic high. If it got back up to those levels, would that be a time to sell potentially? Yeah,
and as we're working through this market cycle model, specifically, we're going to be looking for two things. One is time. Where are we in terms of the cycle? And then the second thing is sector performance. So if we see industrials on a relative basis starting to underperform, that would be the other clue or tell that, hey, look, it's time to start easing off that sector. It's the same thing we're seeing in energy right now, actually.
Okay, Javed, that was great. Thank you very much indeed.
Thank you so much for having me.